Over the past 2 years, shares of the semiconductor giant Nvidia, ticker symbol NVDA, down 2.09%, have delivered incredible returns for investors. The stock more than doubled in both 2023 and 2024, soaring by 860% since the start of last year. This phenomenal growth can be largely attributed to the impact of artificial intelligence on Nvidia's revenue and earnings. Back in December of 2023, I discussed several reasons why Nvidia's shares might double again in 2024. Chief among these were the strong demand for its graphics processing units, often called GPS, for AI model training and inference, along with steps taken by its manufacturing partner, Taiwan's Semiconductor Manufacturing, known on the stock market as TSM, to ramp up production. In this article, I will explore Nvidia's key growth catalysts for 2025, explaining how this high-flying chipmaker could potentially double in value yet again in the coming year. Before we begin, this video is not an investment advice and must do your own diligence. However, with my experience investing for years, the content from this video has a solid research foundation. Check our Patreon on the description below for an inside members-only access on what are the best buys now. We will also update you on what to sell for gains or to avoid losses. Subscribe to our channel so you will never miss out. The company's newest generation of graphics processing units, or GPUs, is built on its Blackwell architecture and will be the main growth driver in the year 2025. According to the company's management, who spoke during the November earnings conference call, these Blackwell chips are now in full production and are already being shipped to customers. Blackwell-related revenue for the current quarter should surpass expectations because the supply chain is strengthening. The company also stated that the demand for these GPUs is significantly higher than the available supply. This is a positive sign for Nvidia as it heads into the new year, especially since TSMC plans to increase the production capacity of advanced artificial intelligence chips considerably in 2025. Market researcher IDC predicts that TSMC is on track to double its chip-on-wafer-on-substrate capacity, often referred to as CoWoS, to 660,000 wafers to meet the needs of Nvidia and other AI chipmakers. Reports indicate that Nvidia might secure around 60% of TSMC's CoWoS capacity for 2025. As a result, Nvidia could substantially boost the output of its Blackwell processors. In October 2024, analysts from Morgan Stanley reported, according to a story on Tom's Hardware, that Blackwell GPUs are already sold out for the following 12 months. However, that waiting period could decrease based on TSMC's plan to expand capacity, enabling Nvidia to fulfill more orders and potentially achieve a large increase in data center revenue. Morgan Stanley estimates that Nvidia could ship between 60,000 and 70,000 Blackwell B200 server systems in 2025, with each system selling for roughly $2 million to $3 million. This implies that Blackwell systems alone might generate somewhere between $120 billion and $210 billion next year, with $165 billion as a midpoint estimate. Analysts anticipate Nvidia will reach $195 billion in revenue in its fiscal year 2026, which will encompass 11 months of calendar year 2025. This figure represents a 51% rise from the current fiscal year's projected revenue of $129 billion. However, given the revenue potential from Blackwell sales and the fact that Nvidia will keep selling its previous generation Hopper chips, it appears likely that the company could surpass Wall Street's growth estimates. This scenario could set the stage for Nvidia's stock to possibly double in value. Analysts are predicting a remarkable 50% growth in Nvidia's earnings for the upcoming fiscal year, projecting an average of $4.43 per share. This is significantly higher than the 12% growth expected from the S&P 500. Just 3 months ago, estimates were at $3.99, and they've climbed steadily since. The highest forecast? $6.11 per share. Nvidia's strong position in the AI chip market could push its revenue even higher, potentially exceeding current expectations for 2025. If Nvidia hits $5 per share next year, and maintains its 55 times earnings multiple, we could see the stock price soar to $275, nearly doubling its current value. With the potential to outpace the S&P 500's growth, Nvidia is likely to maintain its premium valuation. Investors holding on to Nvidia might just find themselves riding a wave of strong momentum as we head into the new year. Give us a like if you like our video, subscribe, and ring the bell to never miss out. Check our Patreon for an inside look on what are the best buy and sell stocks every week.